All right, so stocks started the week like they started last week, with a pretty decent size move to the downside. Didn't hold like it did last Monday. So we're going to talk about what that means, what today's move means in terms of what we were looking for going into this week. Remember, we came out of last week looking for weakness this week, the last full week before the election cycle, and we've got a little bit of it today. And you know, a lot of it was made out of it, and 1-2% moves. But we have to remember that this is not that significant of a move. And I'm going to kind of show you the context. And remember that if we get another move like this tomorrow, it's not going to be that big of a deal. Any kind of weakness we may get or we expect to get, I'm going to show you in today's video just kind of what we can expect it to be, what it's going to look like, and why we shouldn't be too worried about that, especially if we've been preparing for this type of move like we have been in our classes and market outlook videos with the types of trades we've been looking at. So with today's trade, very similar. So let's go ahead and get started. Today is Monday, October the 26th, 2020. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, well, let's start off taking a look at the S&P 500 with the market forecast indicators. You can see we did continue the selling, very similar type of move as we had to last Monday, except for this late little rally here at the end of the day that jumped us up to back above the moving average, so it stayed green. There was a brief period of time today where we went red. It was actually turned lower, and we were obviously at the lows of the day. So a very good sign, at least at the very end of the day. Kept all the lines are pointed lower, but at least it kept some of these short-term lines from getting too low, and neither one of them are down at any kind of extreme levels. The intermediate line, market sentiment line are both falling, but they're both light pink shading, so there's nothing too concerning there per se yet. They're bearish, or just weakly bearish, and you can see it's the same thing on the Dow. The difference with the Dow is we did close below the moving average, and it is rolling down. So we were that far below that when we rallied at the end of the day, we stayed pretty decently below the Dow Jones Industrial Average there. NASDAQ did the same thing as the S&P. We closed back up above, a nice little rally there at the end. You can see how the NASDAQ has just basically got through to the other side of the retracement zone. Breaking through the retracement zone, that's a different story, right? We're talking about how bearish this can be. It's not, getting through the retracement zone is relatively easy, especially considering we were in it the whole time. Whereas you look at the S&P 500, we got close to the bottom end of the retracement zone at the lows of the day. So we're looking at about 3350 is kind of like the level where things can turn a little bit lower, right? Especially if we were to break the 3300 area, the 23% retracement level, and resume a downward move to these lows, if not eventually down to that 78% retracement level I've talked about before, right? To 3135 area. So this area here, 3350, is important. As you can see, the NASDAQ's got a very similar level there. And then finally, the Russell 2000, getting the cluster that it did on Friday, the only one to get a cluster during this rally. So the Russell's been really bullish. Very similar type of cluster is what we got right there. And again, you can see the weakness following a very similar pattern, actually, as to what we got over here. Turning into light pink. We were dark green shading and green line, kind of flirting with some weakness there, but at the time of the cluster, we were dark green shading and green line. Then we rolled over to light pink shading, and we'll see if that ends up being the case. We're still above 80 here, so we're still not quite to light pink shading. Probably need another day or two of weakness for that to play out. So you got bearish patterns on all these indexes, and as bad as today was, almost down 2%, it's not that big of a deal, right? We have to moderate. Like, back in the day, even like back in 2019, a 2% move would have been significant, right? Back over here, a 2%, let me go 2 years out here, a 2% move would have been significant over here. But now, not so significant. Even since the beginning of September, it's not a very significant move. Volatility is high, but the historical volatility is not. In fact, historical volatility is ramped back down after jumping up at the beginning of September. We have since, with this volatility here, we've ramped back down, and today hasn't really changed that. We did get, another, this is a little different than what we've seen before. So some of these other indexes that we started off with some pretty strong opening gaps to the downside here on October the 2nd, and then again on October the 15th. On this day, we finished down, but less than 1%. So we actually gained after the open. And then over here on this day, we actually barely fell on the day by the time it was all said and done. So again, gain on the open. But this one, we opened up down pretty significantly down, 1 standard deviation, but we finished pretty sharply down nearly 2%. So a little different in that perspective. Suggests again we might continue to get some of that weakness going forward. We've been talking about expected weakness for a while, and last week I hit it pretty hard with weakness going into this last full week before the election, especially in my classes in our trading rooms online. So it's playing out as kind of what we expect, and again, the weakness we expect is not fall off the cliff weakness. We might not even get down to these lows. We might just kind of flirt with this 23% level by the time the week is over. But kind of watch that 33.50 level to see, especially considering that's the low of the day, and we had a rally off of that low. So if we can't hold that low, that lower shadow there, then that's going to be pretty bearish. So kind of watch and see if that holds. I don't expect it will, but I also don't expect that we'll fall off a cliff. Some people were calling today kind of falling off the cliff, and we know that's not the case. We talked about 34.30 being an important level, and we moved below that, and that's so now we're still in the retracement zone, and there's not a whole lot more downside. There's going to be lots of support here, so it will be frustrating because it will just seem like it's going down every day. But the reality is we're not doing anything like this anytime soon, or even what we saw back in 2018. We're not going to see that kind of move or that kind of move, right? It's going to be more of a grinding, and that's everybody can handle that. All right, before we look at some other charts here, I invite you to subscribe to our YouTube channel. Mouse over this icon here in the bottom right corner of your screen. Hit the red subscribe button that pops out. There's also one down below the video if you're watching us there on YouTube. That notifies you when our videos are posted. Also, while you're there, hit that thumbs up icon. That tells us that you liked our video today and you want us to do another video again tomorrow. Quick way to give us feedback. If you don't like our videos, you don't have to click on anything. But if you do like our videos and you want to let us know, you can do it with one click right now while you're watching. Also, comment down there. What did you get out of our video today? What stood out to you? What questions or comments do you have? Share that with the rest of our Market Outlook community down below. Join our website at marketscholars.com. There's a link popping out up there in the top right corner of your screen. Click on that link to subscribe to our site for free. Follow me on Twitter for more content in between the videos from day to day. There's my handle right there at DavidSettle42. And join our Market Outlook Facebook group that we've created. All right, if you're watching us on our blog here on the video here, check out our Market Outlook live video over here on the right. That's where I review all the old trade ideas I've done in previous videos. So every day I do a Market Outlook, I do a live video at 3:30 Eastern time. And this is where you get to it. So you can click here. You can also come up here, mouse over Market Outlook, and click on Live Trade Review. We review all the trades and we keep going until we close the trades. That's different than other videos where people just tell you, oh, look at this or trade that or trade this. But then they don't follow up and continue to manage that trade, position size it according to how we teach risk and all of that. We do that, and I do that here in this video. So check that out. There's all of our trades I do are representatives or samples of what I do in different classes. So you can see tomorrow I have my directional option strategies class there. Brandon has his very popular dividend growth investing class tomorrow morning. Come over here, click on this heart right there. That opens up a new window. Hit that like button. Also hit this thumbs up icon. It takes you to a new page, new tab. Click the thumbs up on the Facebook post as well right there. Again, the more you do that, the more of our followers will actually see our posts. See, Facebook doesn't show our posts to all of our followers. But the more engagements it has, they will. So we invite you to do that. That benefits us. It also benefits you. The more Twitter and Facebook will promote content in your timelines from the accounts that you engage with the most. We try to make it really easy for you to engage with us here. All right, now let's check out the long-term chart, and you can see we went from a transition from bullish candles, pretty darn bullish candles too, to a transition last week, to a bearish candle this week. Lower, it's not it's a lower close, it's a lower low point, no upper shadow. So that's a pretty, we transition right to a bearish candle, and you can see we have falling PPO at a relatively high level. So again, when you have high PPO, we're not going to fall off a cliff. We're not getting these types of candles anytime soon. But I do expect that we'll work our way back towards that 200-day moving average, because we haven't yet. And you typically do after you get golden crossovers. You work your way, as the PPO rises, you work your way to test the 200-day moving average before you continue the trend. And we haven't done that here. So I expect that that will be the case over the next week or two or three, where we hit that 200-day moving average. You can also see too, the same thing applies on the market forecast for the weekly chart. You can see right now this is actually a pretty bullish candle for the week. We're only one day in the week, so keep that in mind. Depending upon how we finish the week is where the short-term sentiment will finish. So we want to keep an eye, and you notice we haven't tested that moving average yet either, and it's creeping up past the 78% Fibonacci retracement now, working its way towards that 23% line where the 200-day moving average is sitting. Let's take a look at the 3 green arrow charts, and you can see two red arrows. We almost got a third one here today. If you look at the 2-line versions, we are below the 17-day moving average, well below it. Remember, we either pop back above it or we don't. So keep an eye on that. We'll see how far, if we do get below the 30, how far we get below the 30. It's one thing to only close a 0.5% below, but when you're 2.5% or more below, then you got a pretty decent chance that we'll stay below for a while. So we'll keep an eye on that. The MACD and stochastics are both below their moving averages. The MACD histogram went down again. The stochastics is flirting with the lower half of its chart. The MACD's got a little bit more room to go, especially its moving average. But they're all pointed lower, so you can see where the path of least resistance is right now from a lot of these oscillators. You look at the DMI. We were talking about the DMI not making any kind of directional moves. Well, it kind of did today. So you're not above 30 yet. You're not below 20 yet on the positive. But that's a little bit of a breakout to a directional move that we want to keep an eye on there. Then you look at the RSI and the CCI. We're breaking below the midpoints, breaking below negative 100. We'll see if we follow up today with a significant move tomorrow that will solidify the breakout. Again, I'm not talking, when I say significant, I don't mean like hell's gonna freeze over type of a move, right? I believe it's going to be like, a pretty like a today move. Today's not that big of a deal. It's stay within a retracement zone. It's nothing in context of the moves we've had, and I expect that we'll get a similar type move tomorrow. Otherwise, if we bounce back up above here to where we were last week, then there's a good chance that we don't go anywhere this week heading into the election, and we just kind of stay flat until we get to Tuesday and we start to see where the certainty or uncertainty is or not. All right, now let's take a look at the intraday volume. You can see that big move we had at the very end of the day here, with big jump in volume too, that pushed us up into this level. But you can also see too that we were flirting with the lower end of the 4-week value area, this purple shaded area where 70% of the volume exists, which means, and that's going to even be more the case because as we go through each day, we're going to be taking volume away from down here. Doesn't give us a whole lot of support. If we break today's lows, after having broken through last week's lows, if we break today's low tomorrow, then that's why I think it could be another significant move. We did get a gap open today. Whether or not that ends up being a breakaway gap or not to the downside, because we never really did in September get a breakaway or runaway gap, where we start the intermediate run with a move to the downside, a gap to the downside. So we'll see if that ends up being the case today. I don't think that that's the case, so I do think there's a good chance that does get filled in. It doesn't have to get filled in immediately. It took a while for like this move to get filled in, and it's still not completely filled in. But it took a few weeks, right? That's what we did today. So it might be a while, but yes, I do expect that we'll probably fill in that gap by the time all is said and done. If we take a look at today's volume and trading range, we finally picked up in volume there. 91 million shares trading hands today, a 7-point range not including the gap. So the high today at 342.98, the close at 345. So almost 3 points added. So we had a really decent sized move, almost double when you include the gap, and then the volume picking up as well. So everything kind of picking up here. Obviously, that's well above 2%. So, kind of keep an eye on that 2% mark as in terms of our bullishness and bearishness. If we're going to stay with these stronger moves, then we should expect more weakness. Again, like I showed you here, if it's a one-day pop, like you saw so many of these other times, then we'll just pop right back up and be fine. Like every other 1% plus drop, we just pop right back up. A little bigger pop there and a smaller pop here. But if we stay down, then we know that we're back into this intermediate pullback that we never really finished, especially with the gap widening here, because that suggests the gap widening with the VIX rising suggests that gap always gets filled in, and it gets filled in with historical volatility rising. You can see that's a much bigger gap than we've had for a while, even over here. So you expect that gap to fill in, and then most of the time will fill in with that historical volatility rising. So that's why I expect that we'll see some more weakness and bearishness because of that. Volatility finally went up to 100%. This is the first time that it's gone up to 100% this entire cycle since we started in September, or early September, where we started the intermediate pullback here. There we go. So we started right there with that jump higher. You notice we're still lower on an absolute basis than we were there, but we did pop above 30 finally, so we kind of broke through some resistance there, so to speak, and then closing at above 100% for the first time this entire time. So you see how strong volatility is, and again, another reason why. Now, again, I don't expect we'll get up to 120%, but we'll probably be flirting around in this 105% mark for the next probably the rest of this week, if things maintain this volatility heading into, like I said, an uncertain result coming up next Tuesday night. All right, before we move on and take a look at what's driving the price action today, different intermarket relationships, just to summarize the technical outlook, we were looking for weakness going into this week, and we got it today. And it's a very similar type move today as we got last Monday. But then last Monday, we just went sideways the rest of the week. And if we kind of nullify this move, we'll probably go sideways. Tomorrow, we bounce back up and kind of nullify this. Then we'll probably go sideways the rest of this week with volatility kind of staying elevated. But more likely, I think that's a less likely scenario. I think the more likely scenario is we follow up today's move with another move similar tomorrow to the down, at least flirting with today's low, at least flirting with today's low tomorrow. We'll see, obviously. Anything can happen in very short terms like that. But I think that's what a lot of these technical indicators are telling us, that we can expect more. It might not come day after day after day after day, but especially if we do get another significant move, similar to today's significant move. Again, not falling off the cliff here, so no markets and turmoil specials coming on, just weakness, typical weakness, which we just haven't seen. We didn't even see that in September. We didn't see typical weakness there, as volatility stayed really low during that jump. Well, now volatility is a little bit higher, so now this is a little bit more typical. And that's why we've been hedging lately with some bearish trades in our portfolio. That's why we've stayed neutral with a lot of our trades as well with iron condors, and that's why in a day like today when the market's down 2%, our class portfolio was flat. Actually had a little bit of a gain for most of the day because of how we prepared ourselves for this type of market environment. So what do you think? Do you agree with that? Do you disagree? Comment down below, especially if you disagree, as to why. What are you seeing? What indicators or charts are you looking at that tell you why you're either a lot more bullish or a lot more bearish than I am? All right, now let's take a look at what's driving the price action. You can see it was a risk-off day today. There's the small caps. QQQ continues to roll down. Emerging markets coming down. Commodities were down big today. Even gold was down today because the dollar was up and bonds were up. So if I just look at today alone here, and remember there was, the rally at the very, very end of the day. But if you just look at today alone, you can see, there's that rally at the very end where everything kind of popped up. But you notice that the dollar didn't pop down, the gold didn't pop down, the long-term bonds didn't pop down. So this is about as risk-off of a move as you could possibly get with TLT really ramping up here. Let's take a look at TLT on its, let's go to the Bollinger Band chart first actually. And take a look at TLT here, and you can see the bounce up it made. Now remember, it had already broken down. It's been breaking into this volume gap, so any move higher is going to be very limited. So, you know, again, like I do expect some weakness in equities, and that would be bullish for TLT. But that's about the extent of the bullishness that we can expect, maybe up to that point of control area. But that's about it. So if you're looking for, you know, any kind of move lower on yields, don't expect a significant move lower. Like this, we've set the low point here over a long-term basis, and I expect that we'll continue just to grind that way higher. There's the move. I mean, look at this week's candle on TLT is still bearish, so there might be a little bit of a transition here. We might get a little bit of a pop back up above the 200, but you can see the momentum is clearly to the downside. If you look at the alternative, we got clearly strong positive momentum. It's just hard to go from very negative to zero without a little bit of a hiccup, right? It's when you got such a wide gap between the 200 and the 50. So I expect that the 200 will work its way down, and we might slow down on the rally here in the yields before we finally get the golden cross where we rally to the upside. You remember, same thing on the weekly market forecast chart for the yield. You can see we're just barely turning green. The intermediate line's at 49.8. So we're almost there, and usually when you get a turnaround, there's a little bit of a retest first before you can get going again, right? It's not you don't just break out. There's a little bit of some weakness when you get going right around this area here before things turn around and stay and really kind of break up to the upside and stay bullish. So that's kind of in the mode right now. A little bit more volatility because we're a lot lower in yields than what we saw in some of these areas over here. But that's kind of what I expect. You know, we'll get some rollover in that near-term line down to a lower level first before we really get going to the upside. I also mentioned commodities. You know, you look at like crude oil, and you can see crude oil after getting a cluster on its weekly chart, which is like you would not have thought just a while ago, and it was actually a kind of a lower high point there. But if you look at it here on a daily chart, you can see we're kind of rolling down and breaking down on below the moving average. Light pink shading, about to get a red line, about to get dark pink shading. Market sentiment's crossing below 50. So things are looking pretty weak for commodities. Not like, again, fall off the cliff weak, but looks like we're flirting with dropping towards that 23% retracement level again. And like I said, worst case scenario is probably going to be going down to 30. And that would be it, right? And we'll find some support from the Fibonacci retracement zone. And if you look at the Bollinger Bands here for crude oil, you can see the resistance that we're met up against with here, and then you can see down to 30 would be still in the value area, and we'd meet up with some volume between the 23 and 38% retracement level. All right, if we take a look at some of the other major economies out there, I mean, we're dark pink, light pink, dark green, light green, all across the board. And even the dark greens, we're getting moves down towards the moving average here. We got some dark red lines with dark pink shading in Germany. Look at that breakdown in Germany there, the breakdown in the UK, breakdown in Italy. So Europe is really struggling with COVID counts. France is almost back. It's back below to a red line, but you almost a dark pink shading there as well. And as has been the case, Asian countries continue to hold up a lot better. India, China, South Korea all holding up. They're down, but they're still dark green shading, green lines. China especially well above its moving average. Japan holding up relatively well, kind of looking like what we expect the United States to look like. Russia, not so much, and you can see Canada and Brazil also struggling. So broad weakness all across the board, this time including the United States. If we take a look at the sector moves and how they're performing, here's the 12 grid for the sectors, and you can see again lots of light pink shading, a few dark red dark pink, excuse me, with the red lines. Look at utilities and how strong it remains. It's the strongest sector we've got. That's not our best leadership here, but that's the strongest sector we've got. Your cyclicals up here at the top also, relatively strong. Everything else is flat, looking relatively bearish. Like there's a little bit of a transition here and towards some weakness and strength in utility. Not even real estate's able to hold up well. Strength in utilities is our best bet right now. Energy kind of holding up too because there's not much lower. It's already gone so low, 22%. That's by far the biggest number on this entire list. With discretionary by the biggest number to the upside, right there with utilities and technology and industrials. I mean, those are not areas you expect to kind of all see together, but those are our best performers, and utilities holding up. That's not bullish, right? So we'll see if that continues to play out into some weakness, like I said, into the rest of this week. Before our trade idea of the day, I wanted to take a look at a bearish trade. The stocks that will do the weakest during any kind of volatility will be the stocks that don't have a very good margin of safety. And to kind of give you an example of what that looks like, let's take a look at Salesforce. How bullish it was coming out of its earnings. And we do have earnings coming up again here in November, but you can see we've been unable to really build a solid base up here. That's about as big as we've gotten, and we're breaking below to the downside. Into the lower quartile of the bandwidth, where we were at one point below the lower band there. If you take a look at like Ichimoku Cloud, we're breaking into the cloud, flirting with the top end, and we're not very far away from the downside of it. When you look at like RSI and CCIs, now this came off of its lows too, but flirting with that negative 200, flirting with the 40. You look at its DMI, also flirting with 30 for the negative index. Well, already easily below 20 on the positive index. You can see the market forecast chart itself is giving us a new bearish pattern here with dark pink shading and a red line, which we haven't had here yet. Intermediate line well below its market sentiment. Then you look at, the only thing is we still don't really have strong bearish short-term sentiment there. And then finally on the two-line version of the three green arrow, we have three red arrows, and you can see that the stochastics is dropping, the moving average is dropping, the MACD's moving average is close to dropping below zero, which it hasn't done in quite a while. The 8 and the 17-day moving average are close to crossing below the 30-day moving average. I mean, that's a pretty decent drop below the 30 after having got the three red arrows actually over here. So kind of a breakout after that. So there's opportunity for downside, especially because there's not very much volume support, as I showed you on the Bollinger Bands. So if you take a look at the chart here, we say, okay, well, let's look at selling the 220 and buying the 225 long put vertical spread. And this is what it looks like when you're on the chart here. So we'll position size for half a normal position size because it's a directional trade. If it continues to pop up, then we'll take a couple $100 of loss, no big deal. But if it breaks down to the downside, then we've got, for that couple $100 of risk, we've got up to $1,500 of reward, which we're more than willing to take. Remember, there is no volume in this area, so it can be very easy for it to fall, even all the way down to about 210 is where you start to pick up in volume there. So it's got a very good opportunity to fall down here if the weakness bleeds into a stock like this that doesn't have a very decent margin of safety to hold it up. Hold it up if things get weak over this next week or two, going into its own earnings, especially with all the big tech earnings that we have coming up this week that can potentially bleed over into a stock like this on an indirect basis. All right, well, that does it for today. You've heard from me now. Now I want to hear from you. Use that link popping out in the top right corner of your screen. That takes you to our Market Outlook forums on our website. Post any new threads there with any questions or comments you have. Reply to anybody else's thread. Let's keep this conversation going in between videos. As always, thank you for watching. Remember to subscribe to our YouTube channel. Hit that thumbs up icon, as well as on Twitter and Facebook too. And comment on the video. Have a great rest of your Monday night, everybody, and we'll see you all next time.